Are index funds for you and me? Can they really help in diversifying a portfolio better? Hi, this is Amit Mudgill from etmarkets.com, and in this video, Mr. Pratik Oswal, Head of Passive Funds at Motilal Oswal AMC, will tell us how to make the most of index funds. In the last video on index funds, we talked about principles of passive investing. In this video, we'll talk about do's and don'ts of index funds. Hi Pratik, shall we start?
Yes.
So what are the biggest advantages and disadvantages of index funds?
I think one of the biggest advantages, and we've mentioned some of them before, which I haven't really sort of touched upon in detail, is I think simplicity. I think the reason why every portfolio should have index fund is because of how simple the products are. And we've all seen that, I think even in the index fund category, there have been so many other funds. There have been smart beta, there have been factor tilts, there have been a lot of innovations that have happened in the industry, but ultimately, what has grown over the last, say, 15, 20, 30 years is simplicity. So any person who is looking to have one multi-cap fund, or one small cap fund, one mid-cap fund, instead of him or her going to many other, or trying to select the right fund manager, and the problem is when you have so many funds, you end up choosing the fund that has done well in the last 3 to 5 years.
True.
And what we've seen is that the funds that end up doing really well in the past may or may not do well in the future.
Mm-hmm.
So I think by choosing something simple, I think you're doing yourself a lot of favor.
Mm-hmm. So what kind of investors should invest in index funds?
Yeah, so I think honestly, from what I've seen, I think every investor should have at least some allocation to index funds. So what I typically tell investors is, my background is, I used to manage money for very wealthy people in the US. And what I realized is that if passive investing one or if active investing one, investors would ideally have 100% active or 100% passive. But the reality is that I think all investors that I've worked with have a combination of active and passive funds. So which is why I think what I tell investors is that at least have a minimum of 15 to 20% of the portfolio in passive funds. That should be your core portfolio, which you will not touch for many years, hopefully decades. And then you should also combine that with, say, a satellite portfolio, which can consist of, say, active funds and other asset classes like real estate, gold, etc.
So what should determine that percentage, that allocation to index funds?
Yeah, it's a very good question. So I think age and risk profile is two things that come to my mind.
Mm-hmm.
So someone who is much younger, say someone who's 20, 25, 30,
mm-hmm.
looking to invest for a very long time period, say someone is looking to invest for retirement, and he's looking to invest for 20, 30 years. So for that sort of a personality, you could ideally look at allocating a much bigger amount to index funds or to passive funds. Whereas someone, so I think age is, the younger you are, the higher the allocation should be. And the other was risk profile. Someone who is ideally looking at, I think much riskier investing, should, or someone who's more risk averse, who likes lower volatility in the portfolio, should ideally go for index funds. Yeah.
So what should be the do's and don'ts one need to keep in mind before investing in index funds?
Yeah, I think one of the biggest questions I get is that do index funds outperform the benchmark? And I think that is not possible. The whole point about investing in the index is to track the index as closely as possible. So I think investors who are looking to outperform or the benchmark or do better over the long term, should not choose index funds. I think the point about index funds is to get you the market return, which is what the benchmark is. So I think that is one of the things that investors should keep in mind. The second is that investors shouldn't do it for the returns. They should do it for the risk and simplicity. Index funds, obviously, especially in the large cap space today, have done really well. But investors should see that as how can I get large cap risk in my portfolio? How can I get some small cap? How can I get some mid cap? Because so I mentioned before that the conversation today is moving from, say, which fund to buy, which fund to sell, to how do I sort of combine those assets that match my risk profile. So So I think what we've seen is that returns come from asset allocation, not from fund selection.
Thanks, Pratik, for the crisp answers.
Thank you so much.